After that, we're going to talk about the core beliefs of some investors that we recently tested in our first quarter of research. And they're kind of surprising, sometimes not surprising, but it is surprising. George will briefly discuss our High Net Worth Insights newsletter, and then if you have any questions, feel free to type them in at any time. We'll be happy to take them. So at this point, I'd like to introduce to you our president, George Walber.
Hello, everyone. Thank you, Kathy. And let's go ahead and take a look at this month's index. We will send to everyone two things after the call today. One, the actual presentation, and secondly, we'll send you the High Net Worth newsletter that we create every month. As some of you may recall, our index is created each month based on our research with wealthy investors. We released the results on the first business day, so these actually were released yesterday morning. And it's a great pulse of how wealthy Americans, those worth $500,000 and above and those worth $1 million and above, how they're thinking about a number of different topics. We've just out of some interest in terms of what's happening in everybody's news cycle, the election. Some sense for, on some key questions, what does wealthy investors' political affiliation, how does that impact their thinking on some of this? So let's go ahead and look at page 4 in terms of what the actual index results are for the month. What was most interesting this month is that even though it hasn't been a huge, robust increase from last month, which was really just a 6-point increase, but what's the most interesting from the Millionaire Index is its return to the exact level where it was a year ago. In a little bit that doesn't necessarily mean that it's the high point from last year, but after a pretty sort of up and down year, the last 12 months, it essentially is back to where it was. Quite that is driven by what the market's been doing the last 30 to 60 days, but it is interesting that it's after everything that's happened, it's back to where it was. The overall Affluent Index was flat in the last month and flat from a year ago and just trails a year ago by a little bit. And in terms of context, you can see here as well the high points for the Millionaire Index was 25, and it's back up to 11, so we're getting close to that. And then the Affluent Index was 17, and that's only at 4. So let's go to the next slide. Here you see really what I call the roller coaster ride. The top chart shows the past 12 months. The bottom chart shows since the indices since the inception in 2004. But as I said, if you focus on the blue line for a second, which is the Millionaire Index at the top half of the chart, where it's now at 11, you can see it returned to where it was back in March. The real question will be, and we always like to talk about our index in two ways. One is the current month and the current month increase from the past month or decrease, and more importantly, sort of what's happened over the last 3 or 4 months. So we're trending directly upward. It will be interesting to see if it does keep going this next month for the June 1st data, June 1st research. We'll get back up to the 15 level or the 17 level. That's driven by a number of things. You also see the amber or gold color, the Millionaire Index.
Affluent.
Sorry, Affluent, thank you. That actually is interesting because the slope of that increase this month, being only 1 point, is actually a lesser degree increase than the Millionaire Index. We quite often, and you can see that, traditionally for most months, the Millionaire Index has a somewhat higher number, and you can see every time it drops down to the Affluent number, it seems to rebound the next month. But the Affluent number here is slowing down in terms of its level of optimism on a number of different issues. So that's something that we'll take a look at and follow closely here the next month or two. One of the subcomponents on the next page is what we think is one of the multiple critical outlooks. The subcomponent is the feeling that these wealthy investors have on a number of components. We like to call it the household outlook. You can see again it has been up and down, somewhat closer to where it was in April of last year. The key thing is not so much the exact number, but it's the trend. And we like to look at this on the next page as real subcomponents of this outlook. So I'll slow down here. So the overall household outlook was the first one we just looked at. Compared to it dropped somewhat. at the overall level, and compared to a year ago, it dropped somewhat. What's interesting, though, is that one of the critical components is what do folks think of their household income outlook, and that actually is rising. It rose from last month, and it rose from a year ago. The economy as a whole, this is kind of interesting, and we'll see a little bit more of that as we go on, especially about political affiliation. Wealthy investors are starting to lose confidence in the overall economy and how that will affect their house, which their household income, their household assets, driven a little bit by if the company they work for or the company they own, and as you can see, assets. So although the company health and assets did not drop significantly month over month, you can see where it was compared to a year ago. That could be a telling sign. It's one of the factors that we think is the most interesting part of the index as a whole. On the next page is from political affiliation. Not as much about a prediction of election outcomes, but our interest was really, so do we see some interesting differences month to month with the three general political affiliations, generally meaning most people would say they're either Republican, Democrat, or Independent. You start to see some very significant differences. The overall household outlook, Republicans are most significantly lower than Democrats, and in this one, Independents are a little bit closer to Republicans and to the overall. Household income, you see the same thing, where Republicans are not as optimistic about that as Democrats are. And then the economy, I mean, that's a significant difference between the Republicans and the Democrats, and the Independents are right there in the middle. Actually, mathematically, it's kind of fascinating that they almost are exactly in the middle. Then you look at company health, there's a significant difference in overall household assets. So you start seeing some very difference of opinion by party. What's more interesting is we've done some other research recently in terms of what's happening in terms of government gridlock, government attitude, etc., and you'll see that as well on the next page somewhat. We ask a rotating question, thinking about your household's investment portfolio, what are the factors that most affects your plans today? You can see both Millionaire and Affluent. It's basically driven by the stock market, which makes sense when you think of scenarios. You see that there isn't much different people in terms of their ability to think about retirement. On the next page, you see a little bit of some trend line for the past 6 quarters or so on these same things. But when we ask this question rotating, you start seeing a significant difference that the driver is what the market does. And so in January, in particular with the market being so robust from a volatility standpoint, if that's a good way to say it, really see that that influences folks' thinking. Another key factor of the index, and I think this is important on the next page for providers and advisors, and that is, so if investors had an opportunity to say, I want to invest in the following way in the next 6 months, here's what they would think about in terms of, we might use the word in the industry, asset allocation. In reality, it's kind of a, this is what investors are thinking moving forward. So in terms of individual equities, you can see that it dropped just a little bit, but essentially has been what I would call flat the last year. Individual bonds somewhat recovered from where they were a year ago, actually summertime, June and July of last year. And then cash. Cash is really a proxy for reserve or cautious on the investment. And then you see equity mutual funds. There hasn't been significant shifts here, and you would think back in January we did see a dip for folks saying they were getting out of the equity markets. Hopefully not trying to be market timers. Real estate making a little bit of an uptick. Wealthy investors are big investors in real estate, both from a standpoint of their own second or third homes or vacation homes, and more importantly, investment income properties. So you see that being a little bit of an and the last component that we'll take a look at from the index, these same investment interests going forward on the next page by political affiliation, where you see that a difference between between parties, between Republican, Democrat, Independent, with equities being equal to, interesting enough, as the Independents. It's kind of interesting here that Independents and Republicans are tracking similarly here compared to Democrats, other than in not investing, meaning a category we look at as well as who's going to be on the sidelines. So it's kind of an interesting factor there that we find when we look at life here, looking at political affiliation.
So we have a question here, George. With the Millionaire Index rising back to the mildly bullish zone, do you think there was a specific event or a reason for that you see?
Well, we do see that the index does have some correlation to what the market's been doing the past 30 to 60 days. And so we would say that given where we've been in the market, really in March and April, thus far in April, last month rather, in all of April, but really February we started to turn around, that does influence this overall. At the same time, given where folks feel about the economy, it's hard to believe that this is going to stay at these same levels for the next few months unless there is some significant economic differences. And a little bit also is driven by what the Fed does with interest rates, not just the one minor increase they had, but their plans to either continue to increase interest rates or to shift them or keep them flat rather. So now we're going to shift a little bit to we like to pick a key topic each month. And so as Kathy said, Kathy's going to talk about the core beliefs of some wealthy investors that we just finished recently.
Great, thanks, George. One of the reasons that we chose to focus a little bit on core beliefs in some of our research this year was because you hear a lot of things in the news and the press about, does it really matter? Millennials, do they really believe that they should get a college education because they're going to be saddled with debt? Or does it really make sense still in these days to own your own home? Aren't people renting more instead of buying their home, instead of believing that old-fashioned American dream that you're going to get rich from your house? So we thought that we would ask some of these types of questions and really see, one, first of all, did it matter by wealth segment whether or not they believed in this? And secondly, whether it mattered by age. So you can see we showed in the following slides our answers by age from the millionaires. So these are young millionaires that are answering these questions. And over on the right, you can see we also broke it by our typical segments, which are the mass affluent, the millionaire, and the ultra high net worth. Just to refresh your memories, the mass affluent are individuals with less than $1 million of net worth, not including their primary residence. The millionaires have between $1 and $5 million of net worth, not including primary residence, and the ultra are those with $5 million plus. So you can see one of our first questions was, is it still a prudent decision, financial decision, to own your own home, to actually buy a home? And as you can see, we asked it on a scale of 0 to 100. Most of the people scored between, the average scores between 78 and 81. Obviously, regardless of wealth level, people still believe that owning your home is a really important thing to do. And when we segmented this by age, at least for the millionaires, and it'll be slightly lower for the mass affluent, but not significantly is what we found. Still, the millennials rated owning their own home as a 72. So this core belief of owning your own home, owning your primary residence as opposed to renting it, is still a core belief among wealthy investors.
So it was interesting. I've been traveling the last couple of days, and for the first time I was down in Florida speaking at a SIFMA conference yesterday, and I saw an ad for apartments.com that basically was very critical of home ownership being something that people should do.
Interesting.
And pushing, and the whole theme was, why would you want to have a mortgage payment, and showed somebody pulling their hair out. But I don't know if it was geographical in nature, being in southern Florida, or maybe time that before that young folks in particular, I think, are getting influenced not to buy a house.
So on the next slide, we asked the question about whether having a dedicated and regular savings program is something I consider very important. Now, obviously, this is one that's kind of hard to argue with, I would say. Maybe I'm not as good at it as I should be, but this is one of the core values that I think that a lot of people believe. And as you can see, similar to owning the home, we had about the same types of ratings, a little bit lower with the millennials, who probably find it harder to save right now because of where they're at in their lifespan. So clearly, having a dedicated and regular savings program is something important. So that still remains a core value. On the next page, we asked a question which I thought was kind of interesting. I kind of thought it was more surprising than some of the others. And the first thing that I want to say is when we ask people how they became wealthy or what they attribute their wealth to, 95 to 99% will say hard work. And then we asked this question about, do you think it's important to work during high school and college to kind of teach this work ethic? And clearly, most of these households do believe that. As you can see, basically, even the mass affluent, who tend to be somewhat younger than the ultra, believe that working is very important, even during high school and college years. So I don't know if you yourselves had, summer jobs, but clearly the people who've been relatively successful, at least on a financial basis, believe that their hard work ethic was probably received because they had to work during their high school or college years. On the next slide, we asked the question, which I also found a little interesting, was whether or not a college student should be responsible for financing his or her education and paying back his or her student loans, as opposed to having a parent do that. Now, the reason we asked this was because obviously these are somewhat wealthy households, especially those with $1 million and up. And so you would anticipate that in most cases they would be helping their child or be wanting to help their child. So you can see when we asked that, for the most part, most of these people felt the ultra high net worth were the least likely to think that the college student should pay for his or her own education, arguably because they're more likely to be able to pay for it themselves or to assist their child. And the mass affluent were the most likely to say that the student should be financing his or her own education, probably because this is a type of household where they need to take out some financial aid and be able to receive some help. So it was interesting that very predictable as well, but I do have to say that I would have thought the ultra might have been maybe more in the 25 range. Now let's go back and look at the ultra high net worth by age. So if you look at the millennials and Gen Xers under the ultra, and we combine them for purposes of our ultra just because it's harder to get sample in the millennials, you can see that they're at a 59, so they're much less likely or more likely to think that a student should be financing his or her own education. And that may be because these are very young, successful millennials, and perhaps that's what they had to do. So I thought that this was one of our more interesting types of questions. And then finally, the last question is whether or not getting a college education is very important, because as I said, you'll talk to some younger people, Gen Xers or millennials, and who will say, I don't think a college education is worth it. Now, I would think that the rest of us might argue, unless you happen to be, Bill Gates, for most people, getting a college education is very important. And as you can see, most of our respondents believe that getting a college education is clearly a very important aspect to being successful. Millennials are slightly below, but I would still say more than 3/4 of them at least believe that getting a college education is a critical component. So some of the core values that you see haven't changed that much regardless of net worth and regardless of age as we go forward. Now, the one thing that I will say, which isn't included in this deck, is a question that we asked about the American dream, or what I would call the American dream. We asked the question, part of the American dream can be different depending upon how you define it. One of the components of the American dream has been somewhat a belief that my children will do better than I have, or will be better off than I have been. And the question that we asked was, do you foresee that your children will be better off than you are today? And I have to say, it was very surprising, because less than a third, regardless of wealth level, of these individuals felt that their children would be better off than they are. Now, there's two ways to look at that. You could say, oh, these people are relatively depressed and think that the American dream is dead, or you can think that maybe that's no longer a component of the American dream, in the sense that people feel that they're relatively well off, and maybe it's okay for their children to be at the same wealth level as they are. So that was an interesting finding. So we'll find out in the next few years whether or not they're depressed and no longer believe in the American dream, or if they really just have adopted a sense of, I have what I have and I'm successful and lucky, and hopefully my children will be the same. So that was some of the findings of our core beliefs, and as I mentioned, they were very interesting.
So thank you, Kathy. The next couple of pages talk a little bit about our high net worth newsletter, which is a great, you can look at the next page, which is a great tool for providers and advisors to receive every month. The table of contents here on page 20 gives you a sense for some of the things we talked about today. The second half of the newsletter is the index. But the top half, one of the features we just talked about in terms of core values. But an interesting article about do advisor designations matter, et cetera. A number of our clients utilize this to give their advisors a pulse every month of what's happening with wealthy investors. we have an opportunity here to take some questions if you'd like to go ahead and submit them. We actually have one here for Kathy. With younger millionaires placing less of an importance on college education, do you believe this is due to high student debt numbers, or that they believe a college education is becoming less important than in the current job market atmosphere for finding a new career?
I think that based upon the numbers that we saw, that people still believe that it's really critical to have a college education. I think that the next thing that we'll find going into the future is whether it's important or not to have a graduate degree will be one of the things that will become an important question going forward.
What if everybody gets a free college education?
Then just go to college forever.
Are there any other questions that I don't see any. If you think of any afterwards, feel free to email Kathy or me, or just give Spectrum's general phone number a call, 224-544-5353. We'd be happy to respond to you.
And we will be sending a copy of all of this material to you all.
Thank you very much. Next webinar will be on June 1st, which is a Wednesday. And so we look forward to helping you participate in that. Thanks very much.